All right, let's talk about the uranium market. It's been a really confusing space over the last year, and to make sense of it, we're going to dive into the thinking of a legend in the resource world, Rick Rule. You see, his framework from back in December 2024 basically became the cheat code for understanding everything that happened next. Let's get into it. So here's the big puzzle from 2025. If you were just watching the daily price of uranium, what they call the spot price, you would have seen it bounce all over the place, but not really go anywhere. But at the exact same time, a lot of the uranium mining stocks were just soaring. So what gives? How can the price of the metal itself be stuck while the companies that dig it out of the ground are on a tear? Well, the answer comes down to a huge misunderstanding of how this market actually functions. To crack this puzzle, we've got to go back to December 2024. In an interview, Rick Rule didn't come out with some wild price prediction. No, instead, he pointed to a deep, structural shift that was happening right under everyone's noses. He basically argued that everyone was looking at the wrong thing and completely missing the real story. And this, right here, is the core of it all. Rule's whole point was that this obsession with the daily spot price, what he called tyranny, was making people blind to what was really going on. The real business, he said, was moving toward these big, long-term contracts signed between the mining companies and the utility companies. That's where the real money and the real stability was starting to show up. This slide really breaks it down perfectly. You've got the spot market on one side. That's the one that gets all the headlines. It's a pretty small market, not a lot of volume, and it's mostly driven by speculators. It's noisy and honestly pretty misleading. But then you have the reality, the term market. This is where the giant utility companies go to lock in the uranium they need to power their reactors for years, sometimes decades into the future. It's a huge volume market, it's way more stable, and it shows you what the actual demand for uranium is. Okay, so that was the theory back in late 2024. A fascinating idea for sure, but did it actually pan out? Well, you look at the data from this past year, and the answer is a resounding yes. Let's walk through the evidence. The first, and maybe the most important piece of proof, is how these two markets just split apart. They started telling two completely different stories, exactly like Rick Rule's framework said they would. And this just illustrates it brilliantly. Look at that. The spot price bounced around all year long, causing headaches for traders. But the term contract price, that was a nice, steady, stable climb, moving up from around $80 to 86. And that is the price that really matters. It's the price that determines if new mines get built and what the real health of these companies looks like. The next thing that happened was a seismic shift in government policy. Rule had pointed out that governments, especially in the US, were changing their tune on nuclear, going from being kind of hostile to actually supporting it. Well, in 2025, that idea became a massive, undeniable reality. Yeah, that's not a typo. $80 billion. The US government announced this massive strategic partnership with huge players like Westinghouse, Cameco, and Brookfield to get new nuclear reactors built. This wasn't just some small subsidy. This was a game-changing foundational endorsement of nuclear power's future. It was exactly the policy support Rule said to watch for. And then the other pieces just fell right into place. The strong stock performance we talked about at the beginning, that was investors finally waking up to the stability of the term market. And underneath it all, the basic supply and demand story just got tighter and tighter. The world needed more uranium than was being mined, which forced those utilities to sign more of those long-term contracts at higher and higher prices. Okay, so Rick Rule's thesis was totally on the money. But what does that actually mean for how we should think about this sector today? Well, his insights give us a really clear new way to look at things that helps cut through all the noise. This four-step approach is really the key takeaway. First, just ignore the daily chatter about the spot price. Focus on the contract market. Second, look for companies in places with strong government support, like the US and Canada. Third, find the projects that can actually get the money to build a mine because they have these long-term contracts. And finally, you have to be patient. This is a huge long-term shift, not some get-rich-quick trade. And that brings us to this one critical word: financeability. This is the whole ballgame right here. A company can have the best uranium deposit in the world, but if they can't get the financing to actually build the mine, it's pretty much worthless. It's those stable, long-term contracts with big, reliable utility companies that unlock the funding from the banks. This is the engine that turns high-term prices into actual mines and real value for investors. So, with this framework in mind, what's the future look like? Is the uranium bull market just a sure thing from here on out? Well, Rick Rule has a really clear but also a pretty nuanced take on this. When you ask him about the 10-year outlook, he doesn't miss a beat. He sees this growing global demand for clean, reliable baseload electricity, the power that has to be on 24/7, as just an unstoppable trend. And that, to him, makes uranium an absolute no-brainer. The world is simply going to need more nuclear power, period. And it's not just his opinion. The data from the International Energy Agency backs this up in a huge way. They're projecting that the annual investment into nuclear energy is going to triple over the next decade or so. We're talking from around 70 billion a year today to over 200 billion. That is a massive tidal wave of capital about to flood into this sector. But, and this is a really important but, here's where Rule adds a critical layer of nuance. While the long-term story is incredibly bright, he also warns that for the smaller, more speculative stocks, the initial crazy gains might be in the past. That first big move, he says, from being an industry that everybody hated to one that people were just starting to notice, that was the easy money. And that leaves us with the big question for today, doesn't it? We know the whole foundation of the market has changed, thanks to this shift to long-term contracts. And we know the long-term demand story is incredibly powerful. But for anyone looking to invest now, the challenge is figuring out if the biggest, easiest part of the ride is already in the rearview mirror. The structure's solid, but this next phase of the bull market, well, it's probably going to require a much sharper eye.